What's good, day traders? Welcome to day number 24 of the bootcamp. If you're new to the bootcamp, make sure you like and subscribe and join the community. And today we are going to be talking about head and shoulder pattern. Like we said yesterday, we have a protocol when it comes to entries. We don't just enter straight away. We have to have a protocol. Okay, so I'm going to write down the protocol one more time, sorry, so that you guys can see and it just jogs your memory on it. But it should be, if you guys watched part one, it should be already in your notes. Okay, so number one, when you look for an entry strategy, you have to first identify the trend. So identify the the trend. Okay, number two, we find or wait for chart pattern. Okay, and then number three, wait for candlestick pattern. Okay, and then number four, execution. Okay, execute. As simple as that. We have a 3-step protocol: identify the trend, wait for the candlestick pattern, wait for the chart pattern, then wait for the candlestick pattern, and then execute. So it's very simple, very simple execution plan, and you have to follow this, guys. Like I said yesterday, you have to follow this procedure, because if you don't do it to the T, you're gonna end up losing money, you're gonna end up having false entries, and you're going to end up having issues with your trade analysis and your strategy, right? And so the entry strategy holds a lot of weight, and it's something that you really need to focus on and practice. The more you practice, the better it is. Okay, so today we're going to be looking at head and shoulders. Yesterday we looked at double tops and double bottoms. Today we're going to be looking at head and shoulders and inverted head and shoulders. Head and shoulders is when we are going from an uptrend to a downtrend. Inverted head and shoulders is when we go from a downtrend to an uptrend. So we're going to look at the head and shoulder pattern when we're going the original head and shoulder pattern, right? And then we'll go to the inverted one later. Okay, so let's just go down real quick. So usually when you see a head and shoulder pattern, you have to see some sort of left shoulder, some sort of head, some sort of right shoulder. Okay, and so it's not always going to be as visually like this. It's not always going to look like this, but you need to make sure you identify that the left shoulder area and the right shoulder area is the same. Okay, it has to be the same. So we have to go from like a upward trend to a downward trend, and usually you will see that the right shoulder kind of breaks this internal structure. Okay, so then we have this area, which is called the neckline. Just like the double top, just like the double bottom, we have a neckline. And so the way we wait for an execution is we wait for this pattern to play out. Now, a lot of people, they make a mistake by entering over here on this right shoulder. Okay, if you are trading like this, props to you. You probably have loads of fake outs, but if it's profitable, keep going. But there's another way you can trade with this pattern without getting stopped out, without having a large stop loss. Because usually if you enter from here, you have to have your stop loss all the way above the head, which is way too high, right? So I'm going to show you another way of where you can get better entries and have a larger risk reward ratio. Okay, and so what you do is you wait for price to retest this neckline area. Once it retests the neckline area, then you can go for an execution, a short position right here, waiting for price to give you that candlestick pattern. And then we go for our target, which obviously then we just continue riding it to the next key level. Okay, and then stop loss above the right shoulder. You don't even have to keep it too high. You can keep it right above the right shoulder, and it gives you a lovely trade. Okay, and so you guys have to, when it comes to head and shoulders, the market tends to give you a lot of fake outs. The market tends to, form that right shoulder, come down, and then what happens is price will come down, and then it will spike up and then continue the trend, right? So you need to be careful with this pattern, and you have to make sure you're patient. This pattern itself is super duper heavy on patience, right? If you don't have patience and you enter, anywhere between this leg or this leg, you are going to get, huge volatility, and you are going to basically get stopped out, right? And so even over here, right, you have to wait for a candlestick pattern, because price can easily just continue to go to the upside and then continue like this. So it's like you have to wait for all of these executions before you can start, right? If you don't wait for all these, confluences, you are going to lose in the market, or you are going to get faked out. Now, with every pattern in the industry, any pattern that you see, I know people have, fair value gaps and, ICT models and the smart money trap models and all these different models, right? All of them are going to have a lot of fake outs. It's just how the market is. You can't always be accurate. You can't be 100% accurate in the market. And so these fake outs are normal. Don't feel disheartened, or don't feel like this strategy is not good for you because you just got faked out once or twice or even 3 times, right? Because this pattern has been going on for years and years and years. Like, there's traders out here that have been trading for like 10 years that follow this pattern till this day. Okay. I've been trading for 5 years and, half a decade, and I still use the head and shoulder pattern. I feel like this is one of my favorite patterns. When I see this pattern, it's super favorable. I love this pattern a lot. It's an amazing pattern. And it's very hard to identify, especially when you have a choppy market. But when you do identify it and when you do see it, sometimes not every trader sees it, but when you do see it, amazing execution. And usually you do get a really, really nice entry from this, right? So this is the head and shoulder pattern. Okay, now we're going to look at the inverted head and shoulder. I'm going to show you exactly where to enter, exactly where to put your stop loss, and obviously your targets are always going to be the next key level. Okay, so with the inverted head and shoulder, it's basically the same thing, but the opposite direction, right? So price is coming down, creating a left shoulder, comes up, creates a new lower high. Then price goes down, creates a low, right? And then price decides to come up. Now, usually sometimes it does go above. Once it does this, it creates a higher high, higher than this high. Then we understand, okay, cool, maybe a shoulder pattern is formed, right? Left shoulder, and maybe the right shoulder is getting formed. Once the right shoulder is formed within this area, right, let the market continue to break this structure. Once you see it break the structure, what we do is we then wait for price to come back and test this neckline. Once it tests this neckline, you can go in for a buy. We go in for the buy. Again, after you've seen your candlestick pattern, you go in for the buy, stop loss on the right shoulder, and then you just, target the next key level wherever it is. Okay. Again, a few tips on this: be patient. And you're gonna hear me say this quite a lot, guys. If you're not patient in the market and you enter anywhere before this retest of the neckline, you're going to have a very, very large stop loss. For example, if I entered right here at this break, my stop loss cannot be at this low. My stop loss has to be all the way down here, because price can easily just come and test this right shoulder again. It can easily do that. Whereas if you do it here, you can easily test the right shoulder, because even if price does come down, right, if price ends up coming down, testing the right shoulder, this is an invalid structure, and you just want to be out of the trade. You don't want to be in the trade if it's, ranging on the right shoulder. If it's doing this on the right shoulder, don't even bother trading this, because this is not the pattern, right? Wait until price again forms another pattern, and then you enter again. Okay, so making sure you're patient, making sure that you are waiting for the right signal, because like I said over here on this pattern, price can easily, if I just move this, price can easily just come right back down and continue to go down. Even though we formed a left, head, and right shoulder, it can easily just go down. And because you guys didn't see, even if it did like hover around here, right, even if it did this, right, gave you that candlestick pattern, it can easily still go down. Why? Because we're in this downtrend, right? So most of the times these head and shoulder patterns are at reversals, where price is at its peak or at its lowest, and then it goes for the head and shoulder. I like to use it when we're going through retracements. Remember what I told you guys? When we're going through retracements, right, like a downtrend like this, and then price is making its way up, then does this, and then continues to go down. I like it when it's at this movement, because it's like I'm not going against the trend, and also I can see that price was retracing, and this is the reversal of the retracement. Okay, so that's where I like to place trades, where even with the double top and the double bottom, I like to still be with the trend. A lot of traders out there, they always try to be against the trend, and that doesn't really take you far when it comes to your trading journey, because the market, you can't predict the market's low and you can't predict the market's high. So if you are trading and you can see that, okay, on the high time frame, we're going on an uptrend, and then price has now formed, an inverted head and shoulder, right, at this retracement. Yeah, valid move. It can easily do that, and that's what builds structure in the market and is a beautiful, beautiful move. However, if price is doing this, going up, and then it forms, a head and shoulder, be careful because yes, cool, we do have a lower high here, right? But what price could do is just continue to go up like this. It can continue to go up, okay? And then what this means is that we just had price just make internal structure which was not validated. So it's always make sure you are patient and you'll start to realize that market patterns are very, very nice. Now, there was a question that a student asked me on the Discord yesterday, and I don't think I made it clear. Where do we find these patterns? Like, what time frame do I use to find these patterns? Now, guys, honestly, I would love to see this on the 1 hour time frame or the 4 hour time frame. Okay, if you're looking at it on the 4 hour time frame, just know it's going to take forever to hit your take profit. It takes around a day or two where you're kind of tapping into swing trading. But if you look at the 1 hour, it will take you maybe like 12, 13 hours, half a day, maybe, 3/4 of the day for it to hit your take profit. If you look at the 15 minutes, right? I don't really like to look at the 15 minutes because it does give a lot of fake outs. But if you do look at the 15 minutes, you do get faked out, but you do have a really quick trade, okay? And so the answer that I'm going to give you guys on what's my sweet spot of the looking for chart patterns is the 1 hour and 2 hours. Those are my like sweet spots. If I see it on the 4 hour and I see it on the 1 hour too, right? That's just like amazing, right? That's like the best, is the right confluence, is like the best signal you can get, right? Sometimes you can't see in the 4 hours, but you can see in the 1 hour, or you can't see in the 1 hour, but you can see in the 15 minutes. Those ones are like not A plus setups because if it's not on the higher time frame, you're gonna realize that it can fake you out or be very choppy. So the higher the time frame, the better. You can see at the top over here, I actually have the 2 hour time frame just up there. Is because sometimes you might have to dabble into the 2 hour time frame. You don't have to use it for your entries, but sometimes what I like to do is I'll see, okay, cool. On the 4 hour, we're forming a left, right, left shoulder, head, right, right. And then we're forming this structure. And then what I'll do is I'll scale in. I would highlight, I'd highlight the retest area. And then I'll scale in into the 15 minutes and I'll look for an entry, right? And so even with the entry protocol, I'll still wait for a candlestick pattern. Even though the chart patterns on the 1 hour or the 4 hours, I will still look for the entry, the engulfing candlestick, or I will look for a morning star, evening star, right? And so to answer that question, guys, is whatever you're comfortable with. The higher the time frame, the better. But the tip that I'll give you is if you see on a higher time frame, scale in for an entry. Don't just always go for what the 4 hour time frame is saying, because it will take forever and you will get a delayed entry. Whereas when you go down to the 1 hour or the 15 minutes, you will find a good entry. Okay, so hope that answers your question with regards to what time frame we use. So I hope you guys kind of understand it on this line graph that we've drawn. Take a screenshot if you have to understand it. If you want to see how I use this left right shoulder thing pattern, or whatever you call it on TradingView, if you go to 1, 2, 3, 4 down on the left hand side of the screen, and you'll see that we got X, A, B, C, D pattern, cipher pattern, and then on the third one down, it's head and shoulder pattern. You can actually save that, put in your favorites. One of the best patterns, guys, in the market, and it's amazing. Okay, really, really nice pattern. So now let's look at the chart and see exactly. Let's locate some chart patterns. Let's locate some head and shoulders, and let's see if we can identify, right, head and shoulders. So off the back, we can see that price is going on a downtrend, right? Off the bat, we can see that price is going on a downtrend. So like I said, usually when we're going on a downtrend, I would like to see it at the retracement. So I'm just going to highlight the retracement so you guys can see what I mean, right? So retracements are like this, like this, like this, and like this, right? So usually I like to see this in retracements, okay? And off the back, I can already see that we're already forming some sort of head and shoulder pattern there. So what we're going to do is we're going to scale in. Bear in mind, we're on a 1 hour time frame, right? sweet spot to look for entries or look for patterns, okay? And you can see straight off the bat, we form, you know, the left shoulder. Even though we get some small retracement, we got the head, right shoulder, and obviously the price then comes down, and then we form that retest of that neckline, right? So if I just scale in and show you, so we had, let me actually make it more clear for you guys, so you guys can actually see. Left shoulder, head, right shoulder, right? And I'm gonna make this red so you guys can actually see it clear as day. Can you guys see that? Right? Left shoulder, head, right shoulder, and then obviously we're testing that neckline, which is here. Okay, so the neckline would be right here. We test that neckline, we enter for a sell or short position. After, you know, the candlestick pattern, we can actually, if I highlight this, we can actually scale in, right? Let's scale into the 15 minutes. Let's scale into the 15 minutes and really look for, okay, cool, brilliant, right? Look at this pattern right here, guys, yeah? Easy entry signal. We could probably even enter, if this kind of sticks too bearish for you, you can even enter on the pullback, which you actually see. We have a nice pullback right here, okay? So what I could do, if this is too much, see, we do have loads of entries, but let's just say we entered at this pullback, okay? Being extra patient. Let's say we entered after this kind of stick. We put it above the previous highs, which is here. And then we target whatever the next key level is. So if we're entering at 1957, basically 800, we would target 195 flat maybe, or even 194 flat, or even let's try 194 flat. So we got 195 flat, which it hits, right? 195 flat is right here. It's a 1-to-1 risk ratio. Not the best, but still good. And then we have 194 flat right here, which it smashes, right? It gives us a 1-to-2 risk or 2.3 risk ratio. Still not too bad, okay? Let's continue looking at the market, but can you guys see that? Even I think on the 50 minutes, you can clearly see that, you know, head and shoulder pattern, amazing pattern. And let's keep looking, right? So like I said, I like to look at the retracements. So for example, even over here, we have some sort of retracement, right? And if you guys want to identify retracements, you can always see, like, if we're going on a downtrend, all these pullbacks are just retracement. You guys see? So do we have a head and shoulder pattern here? Well, we're on 15 minutes. Not really my liking. Okay, let's continue. So I would say this is like a really long retracement right here, like really long retracement. And so do we see a head and shoulder pattern? I think we do, guys. I think we do. Okay, and bear in mind, this is just back testing, so it doesn't have to be to the T, right? But I think we do have a head and shoulder pattern. Let me know if you guys see this. Comment it down below. So we have the left shoulder, head. We have really dropped down to the bottom, right shoulder, and then obviously continuing down like this. Do you guys see that? Right? Not the best, not the good looking, but like I said, guys, the more you practice, the easier it will be to train your eyes to see this, okay? And so we see that, okay, cool. Now price does a pullback at the neckline. So the neckline is this is quite a big neckline because it has to cover the neck over here plus all this range right here, right? This is quite big. And so we can actually obviously want the 15-minute chart, so we have to scale it a bit lower to get a nice entry. But let's just say we see our entry protocol over here, we enter for a short, stop loss above the highs, entries, right? Let's say we enter right here, targeting obviously the next key level. So if we're entering at 194 on the dot, right? What an entry, right? So we'll target 193, right? 193 on the dot, which is all the way down here. 193 on the dot. And you guys can see take profit smashed again. Okay, and we could keep going, and I can keep showing you again another head and shoulder pattern. Remember, this is the pullback, right? We see a pullback right here, another head and shoulder pattern, right? Left shoulder, head, right shoulder. This is the retracement of the neckline. Okay, so this time it doesn't really quite hit the neckline. It doesn't quite hit it, but if you guys still wanted to hit this trade, you could probably get your fib level out. if you guys remember the Fibonacci video, you can get your fib levels out, have a look. Okay, cool. Not really good execution. Me personally, I wouldn't even execute in this trade, right? I wouldn't have done it, but that's still a head and shoulder pattern. You can see it smashes TP. Another retracement here, another small head and shoulder pattern. Not the best, but as you can see, it always forms like some sort of head and shoulder pattern, right? And so it's like, it's not the best. Like, this is a horrible, head and shoulder pattern, right? Horrible, horrible, horrible. But it's still, still some sort of head and shoulders. You got the left shoulder, the right shoulder, head. It's like the guy's slanting a little bit. And so, again, touching the neckline, which is here, you can see that price taps into the neckline, bearish engulfing. What a signal. Boom. Stop loss above either the right shoulder or even just this high, the neckline, and obviously targeting the next target, right? And another really, really good trade. So you can actually see that, and I just want to show you guys, you can actually see, if I just delete this, sometimes you get entries, sometimes you don't. Majority of the times you do see entries, sometimes you just miss out the trade. It's totally fine. What I would say is that if you, like, for example, this example here, we're on a downtrend, so you wouldn't see any inverted hammers. So let me just write this down. So if we are in a downtrend, only look for head and shoulder patterns. Okay, if we're on an uptrend, only look for inverted head, and I'm just gonna make it like abbreviated head and shoulder pattern. Okay, so downtrend, look for head and shoulder pattern. Uptrend, look for inverted head and shoulder pattern. Okay, and so the reason why I'm saying this is so that you're not against the trend. Don't be against the trend, guys. I've learned this the hard way. It's like trying to catch a falling knife. It's horrible feeling. It's not nice. And don't go for against the trend. If the higher time frames are saying we're on an uptrend or downtrend, follow it. Don't just ignore it. Don't think that, oh, higher time frame says we're on a downtrend, on a downtrend, and then you can see that on the 15 minutes we have this like lovely uptrend. It's like, don't fall for this. This is just a retracement. Yes, cool. We might have internal structure broken, but this high hasn't been broken. This high hasn't been broken. This high hasn't been broken. None of these highs have been broken. So it's like, why would you think, price is on an uptrend? Clearly, it's still on a downtrend, and most likely, even with our head and shoulder pattern, maybe, right, we could be forming left shoulder, head, right shoulder, and you can see that right shoulder and the left shoulder on the same zone, right? So we could maybe, right, only time we can confirm this is if price breaks this neckline, right? Only time we can confirm this is price breaks this neckline, then we can go for that retracement and then enter for a sell, right? So is literally as simple as that, guys. Like, it's not that difficult. You need to just keep practicing. You're gonna get faked out a lot. You're going to get false entries. You're gonna force entries. That's part of the game, guys. It's literally part of the game. Now, before we end this this day in the boot camp, I want to give you some advice, guys, because I know a lot of you are gonna now practice entries and you're going to, build that confidence. But one thing I'll say, guys, is if you are entering the trade, or if you're scared of entering the trade and you do not enter, that's more of a loss than you actually taking a loss in the market. Okay, and what I mean by that is, if you are looking for a trade and you decide to not take that trade because you're scared, right? First of all, we need to go back and back test the strategy, because that means you haven't built the confidence. But not only that, is you're taking more of a loss than what you would have taken if you entered the market. Because when you enter the market, there's only two outcomes. You either take a win or you take a loss, right? And so if you're scared to take a win or a loss, lower your risk. If you're scared to lose in the market, practice, right? Those are signs for you to practice. If you're not practicing, if you're not doing your back testing, do your homework, watching this boot camp back to back to back, if you're not doing any of that, unfortunately, you are going to get scared. Unfortunately, you are not going to take those trades. And when that trade hits your take profit and you're like, I should have hopped in that trade, I should have taken it, it was my entry model. And then you force the trades after, that's the trap, guys. That's the loop that you're going to get. So, like I said, make sure you enter every single trade that you see when it comes to the strategy or any strategy that you use. Don't be scared, right? And practice, right? The least thing, the craziest thing that can happen is it hits your stop loss. That's literally it, right? And I've had it multiple times. Like this week alone, guys, if you're in the Discord server, you'll know that, I've been hitting some losses recently, right? And so, but I'm not scared. I'll still go ahead and place the next trade. Why? Because I had the data. I've been back testing. I know the strategy works. I know I'm profitable. So I'm just gonna keep going and get right back on track. And so if you're scared, that means you don't have the data. That means you're not confident and you need to create that data, build that data. If that means that you are doing funded accounts, you're scared to, enter your funded account, trades because you're scared that you might not win, go on a smaller account, you know but make sure you enter every single entry, that signal that you get, right? Doesn't have to be every day. It could be once every, 2 days or once every 3 days or whatever it is. But just do it. Don't fall for the trap of, oh, I'm just gonna wait and see how this plays and be too patient. Because I've done it many times as well, where I'm too patient and I miss out on opportunities. And then when I see it hit my target, I'm trying to force trades, and it's not a nice feeling, guys. Because when you're forcing those trades, you're entering horrible entry, and then you're looking at the markets like, I could have actually just entered at the beginning and not now follow through and waste time with this trade, right? So if you do miss an opportunity, fine, just wait for it, let it play out, look for another opportunity. Simple, right? And so that's the advice I want to give you guys. That's the wisdom that I want to give you guys before you start entering. After this video, you guys have the green light to go and enter trades. Like, go ahead. If you guys are still a little bit, not confident with your entries, or you want a bit more help, go ahead, hop on the Discord server, link in the description below. Drop me a message. A lot of you guys, I'm actually appreciate it a lot. A lot of you guys are hopping on that Discord server and you're making the server lit. You're making it great. And we're gonna we're gonna do some more fun things like reactions and stuff on the Discord server. So if you're not part of the community, you're gonna miss out on a lot of fun things that we do as traders. And it's not just always staring at the markets looking for, entries. We do a lot of fun things. We do back testing. And I know back testing might sound boring, but we make it fun. We do a lot of challenges. We're going to do a lot of reactions. We're going to do a lot of things, right? And giveaways and things like that. So if you want to be part of that, make sure you click the link in the description below. Make sure you like, make sure you subscribe, join the community if you haven't already. If you're watching till the end, guys, might as well subscribe. And I'll see you guys tomorrow. See you later, guys.